This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of Daily Market Wisdom with Master Trader Nick Santiago. I'm Kerry Lutz. Today is September 16, 2020. This is show number 118. Well, Nick, today is Fed Day. Market is higher thus far.
Yeah, so far we have the Dow Jones Industrial Average up about 0.25%. It's not a big day by any stretch, but the Russell 2000 is the outperformer today. That's trading up by about almost 0.9%. So that's a good move. The NASDAQ, however, is negative today, down about 0.3%. Now, the NASDAQ had a decent day yesterday, so, today it's pulling back. But I'm still very, very cautious in technology right now. I think you still got to be a little bit concerned there. We still have a lot of stocks trading below their 50-day moving average. A lot of them are trying to recapture it. They're butting their heads against it. So, again, we want to be a little bit careful in tech. Overall, today we're seeing some weakness in Adobe, which had earnings. Stock has rolled over pretty sharply, down about 3.5%. And NVIDIA, which is a leading semiconductor play, down about 2% today, or a little over 2%, with a $12 move lower. So we want to be a little bit careful here, at least in technology right now.
Yeah. Well, that makes a lot of sense because they've had an unbelievable run, and really they got to take a break. They're entitled to a breather, right?
That's how it works. If you run up a mountain, you're gonna need to stop and sometimes come down the mountain for a little food and water. So, again, stock market works the same exact way.
Agreed. So the FOMC, it's 2-day meeting concluding today. What do you think is going to be the deal here?
Well, I'm not expecting a change in interest rate policy by any means. I think the Fed is going to continue to keep their foot on the gas pedal and remain very, very accommodative and easy. But their statement could move markets, and that's what we got to pay attention to. Sometimes, you could get Fed Chairman Powell saying, hey, we're going to do this, or we may look to do this, and that could spook markets a little bit. One thing you want to watch for on a day like today is gold and silver, because they are usually very volatile or sometimes choppy after the Fed announcement. So be aware of that. Precious metals are always affected by the Fed statement, which is going to come out today at 2 p.m.
Yeah. Hey, so one thing I wanted to talk to you about, Tesla, all right? The S&P said no, not yet, and that promptly killed the stock. Now, I'm not one for conspiracy theories, Nick. You know that. I believe everything I read in the New York Times. But, like the shorts, if you had knowledge of this or suspicion, this was your chance to finally make up some of that tens of billions of dollars that were lost by the shorts on Tesla.
Yeah, well, Tesla did have a good tumble, but let's put it into perspective. The market tumbled too when Tesla fell. So while Tesla went from basically $500 a share, split adjusted obviously, all the way down to the pivot low on the 8th of September at $330 a share. Yeah, you could have made a lot of money there. But since then, it's retraced pretty nicely back up to $450. I happen to think that the stock still has a lot of resistance at that $500 level and could actually come back down and make a new low. But, the pattern hasn't told me that's going to happen at the moment. So I've just stayed away from it. But you're right. Somebody always knows something, Kerry. We never know anything because we just look at the charts and the money flow and hopefully interpret the pattern correctly. But there's always somebody out there that knows something. And you could always see that in the options market. Somebody's buying, gazillion options in XYZ because they know something. We see this all the time. We've been seeing it all throughout history. Again, somebody always knows something, what's going on before it happens.
Yeah, it just seemed way too convenient because the market was just assuming that it was a fait accompli. And
yeah, everybody thought that Tesla would be added to the S&P 500 this go round, and it was not. And that caught a lot of people by surprise, and it did hurt the stock initially. But the stock has bounced back a bit But either way, I think when we look at this stock right now, it's been such a fan favorite. The valuation is ridiculous, if you ask me. Now, I think they have a great product. They probably have lots of good products out there, but it's valued as a tech company, not a car company. But right now, I would just sit back and wait for a little bit more of a telling pattern for Tesla. But um, you know, just going back to what you brought up originally, somebody always knows something, especially during or around options expiration.
Yeah, hey, that's enough to make you cynical. So, yeah, I agree with that. And okay, finally, gold and silver, like you said, facing choppiness on the Fed's meeting here. But really, it doesn't matter what the Fed says, it's what they do, right?
That's right. That's ultimately what matters. And they're ultimately printing a lot of money. So, I mean, that's as bullish a case you can make for the precious metals as there is. The more money that comes into play, the more money that is printed over the next 6 months to a year or longer, the more that we'll see gold go higher or silver go higher, or gold miners. And again, they've held up exceptionally well after putting in that minor top. And again, that was right around the 6th of August. So since that time period, we've just been doing a lot of sideways action, slightly lower. I'd like to see gold and silver have one more drop. It'll complete that zigzag down pattern. And then I think it's a buying opportunity.
So, what's interesting, so during this consolidation, not only gold and silver have showed like real relative strength, but so have the stocks, the GDX, the GDXJ. They've even gone up a bit.
Yeah, they've actually held up extremely well. I mean, the GDX, which is the bigger gold miners, that's really not even far off of its highs. Its high was made on the 5th of August, and that was at $45.78. Today we're trading at $43. So I mean, it's barely pulled back. If you look at the junior miners, which is GDXJ, I mean, it's the same thing there. The high pivot on the 5th of August was around $66. We're at $62 now. So I mean, they've been resilient and they continue to hold up very, very well. And the chart is still very, very strong.
Hey, so one of the things you mentioned in a prior show is that in these bull markets, the stocks lead the metal. And here, really, we're kind of seeing that because the metal took a bigger hit than the actual stocks did.
That's right. And you always want to watch for that. As long as the metal is leading, that bull is firmly in place. If the miners, excuse me, are leading, the bull is fully in place. If the miners lag, then you want to be a little bit more in caution mode because that could be coming, the run in the metals could be coming to an end.
Okay. So question is, though, and I've asked you before, and if you don't want to answer, it's okay, but consolidation, it could end today or it might well end later on in the fourth quarter, right?
Sure. Anything can happen. But the point is that it is consolidating, and that's a bullish statement on the chart. The one thing I always say is I always look for these completed patterns. So what I do is I take the bigger picture, I look for the pattern there, and then I break it down into smaller patterns, and I look for timing. And that's kind of the way that I do it. It doesn't always work out perfectly because I'm a bit of a nitpicker at this stage of my life where I want to time everything almost to the penny. But overall, the structure is still very, very strong. And anytime you consolidate and you've moved up, that's just building an army of candles on the chart to proceed a lot higher.
Interesting. Well, we are in interesting times. There's no question about that. We know these metals are going to head higher. It's just a question of when, because like we went through this bear market for many years. The average bull market in metals, could go on for several years or even more. I mean, the last bull market we had really started, I think, in 2000 or 2001, and it ended in 2011. So it went on 11, 12 years.
Yeah, and the one thing I've always told everybody when you look at the precious metal market, these are not cycles that end in 10 or 11 years. They go sometimes 20, 30-year cycles. If you take a look at the 99 low, you go to the 2011 top in gold, and you look at the 5-year pullback that it had, now it's proceeding to break out again. If you just do what we call in the business a measured move, that takes you to around $2,800 gold conservatively. I think it's going a lot higher than that ultimately. But if you just look at those structures, the way the market plays out, I mean, those are some, that's a pretty easy projection overall.
Agreed. And long-term cycles. We kind of don't really talk that much about the long-term cycles here. We're more concerned about the shorter and intermediate term cycles. But of course, any cycle is going to be subject to the long-term cycles that are taking place with variations during that cycle, right?
Absolutely. And, again, there's fractals of bigger and smaller patterns. There's fractals inside of those bigger patterns. So, that's where you get the pullbacks and things like that. But the ultimate structure is still very, very bullish in precious metals. And that's something I think a lot of traders, at least short-term traders, don't even, pay attention to.
Yeah, agreed. Just like they no longer pay attention to options expiration, or as our neighbors to the north call it, options expiry, right?
That's right. And again, this is something I talk about each and every month because you see the games being played. You could take a look at, there's a stock out there called Nikola, NKLA.
Yes.
This week is options expiration on Friday to quadruple witching, which means you got 4 different asset classes expiring this week. But that stock's got hit with, bearish news reports and, all of these different organizations coming out, putting out real negative press on them.
Well, they say it's a scam, right?
Well, yeah, they say it's a scam, and it very well may be, but just notice the timing of it. It comes out during right around options expiration.
Convenient. Very convenient, huh? A little too convenient, and that's the whole crux of the thing. When you've got your big banks out there, your big investment banks or whatever they're called now, and they just have like 150 profitable trading days in a row, something is amiss, eh?
Well, these banks will do very, very well in this kind of environment because there's a lot of money printing. It's very easy for them to get involved in trading. When think about it when the markets were tanking in February and March. I don't think they did very well then.
No, that's true. At some point, they have to be a victim of the market because their holdings are so vast. It's like Warren Buffett, right?
Exactly. So, I mean, Warren Buffett's been, probably has benefited from, the greatest bull markets in history. But, when the markets go down, he doesn't do all that well. In fact, if you just look at, his stock, which is Berkshire, we'll use the B shares because everybody can look at them. Look at that one. It's made a nice recovery since the market's recovered. But when the market was falling in March, I mean, this went down to $160. Today, it's almost back to its not quite at its 2020 highs, but it's at $222. So, again, everybody does better in a bull market. Bull markets are much easier because the market bails you out if you're wrong.
Isn't that the truth? Yeah, and our good friend Rick Rule always says, never mistake a bull market for genius.
That's right. And I have to agree 100% with that because I've seen so many people, yet again, if you've been shorting the bull market, you get your head handed to you, right? And, you might have all the reasons in the world, but there's an old saying in this business, never fight the tape. The charts are always right. The market's always right. And again, until it isn't, you don't want to fight it.
Yeah. Yep. You don't want to be on the wrong side of the trend because, as we always say, the trend is your friend, except at the end.
That's right. And, it's not over yet.
Yes. It ain't over till the fat lady sings, and I haven't heard her sing yet. So let's see what happens next. Anyways, hey, that's it for today. Go check out Nick's site and see his extensive trading record. It's inthemoneystocks.com. Twitter feed at ITMS, at Nick Santiago01, at Kerry Lutz. Email us any questions or comments, KL@KerryLutz.com. And Nick will pick up tomorrow.
Sounds good, Kerry.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.